The future of money is unfolding faster than most people realize, and it's reshaping the US economy in ways that affect how we earn, spend, invest. What used to feel stable and predictable, cash, banks, traditional investments, is now being challenged by a wave of innovation that's redefining the rules of the game. One of the biggest trends driving this transformation is the rapid rise of digital payments. Cash is no longer king in the way it once was. This shift isn't just about convenience, it's about speed, data, and control. Digital transactions create a trail of information. At the same time, it raises questions about privacy and financial surveillance, especially as governments and corporations gain more visibility into how money moves. Closely tied to this is the emergence of mobile banking and fintech innovation. Traditional banks are no longer the only gatekeepers of financial services.
Apps now allow people to open accounts in minutes, invest with spare change, and even access loans without ever stepping into a physical branch.
This democratization of finance is expanding access, particularly for younger generations and underserved communities, but it also introduces new risks around risk. Another major force shaping the future of money is the growing influence of cryptocurrencies and blockchain technology. While blockchain enables secure, transparent transactions without intermediaries, potentially disrupting industries like real estate, supply chain management, and more. At the same time, central banks are exploring digital currencies, which could fundamentally change how monetary policy works, but also raise concerns.
The nature of work is evolving with the rise of the gig economy, remote jobs, and digital platforms, changing how people earn, manage money, and plan for the future.
Financial inclusion and sustainability are also key trends, with technology helping underserved populations access financial services. Ultimately, the future of money is being shaped by technology, policy, and global forces. Money is no longer just a medium of exchange. The next stage of financial evolution will be powered by automation. Smart financial systems will handle budgeting, investing, and saving with little human intervention. AI-powered financial assistants will analyze spending habits in real time. They will recommend smarter financial decisions before problems even appear. Personalized investing is becoming the future of wealth building. Every investor may soon receive strategies designed specifically for their financial goals. Machine learning can react to market changes within seconds. This allows investment portfolios to adapt much faster than traditional methods. Cybersecurity will become one of the most valuable assets in digital finance. Protecting financial data is becoming just as important as growing wealth. Biometric authentication is replacing traditional passwords. Facial recognition and fingerprint verification are becoming everyday financial tools. Open banking is allowing consumers to connect multiple financial services together. This creates faster and more personalized banking experiences. Competition between banks and fintech companies is driving innovation faster than ever. Consumers now benefit from lower costs and better financial services. Financial education is becoming more important than simply earning money. Knowledge is now one of the strongest financial assets anyone can own. Young investors are entering the market earlier than previous generations. Technology has made investing accessible with only a few dollars. Fractional investing allows people to own parts of expensive assets. This opens opportunities that were once available only to wealthy investors. Global financial markets are becoming more connected every year. Economic events in one country can influence investments around the world. Inflation continues to reshape personal financial planning. Families are learning new ways to protect purchasing power. Diversification remains one of the safest long-term investing strategies. Spreading risk helps investors survive uncertain markets. Long-term investing often outperforms emotional decision-making. Patience remains one of the greatest advantages investors can have. Technology continues to lower investment costs for everyone. Lower fees allow investors to keep more of their long-term returns. Cloud computing is making financial services faster and more secure. Banks can now process massive amounts of data almost instantly. Real-time payments are becoming the global standard. Money can now move across borders within seconds instead of days. Digital identity will play a major role in the future financial system. Secure verification helps reduce fraud while improving convenience. Businesses are increasingly relying on financial data to predict future demand. Better forecasting creates stronger financial decisions. The future belongs to people who continuously improve their financial knowledge. Those who adapt early will have greater opportunities in tomorrow's economy.